Hi there. My name is Callum Newman, and I'm one of the Daily Reckoning editors, and we're doing our weekly catch-up today with my fellow DR editor, Shae. Shae, thank you for joining me.
Callum, it's great to see you.
Now, last week we covered a couple of different topics, but this week we said we'd go over your favourite territory, which is the gold sector, and what's been going on over the last 6 months. Now, by way of background, gold had a ripping run at the start of last year, and gold stocks here in Australia were absolutely booming. But it's fair to say they've come off the boil. So it's been going on for, February? So it's probably 6 months now that they've sort of been in a bit of a funk. Can you tell us what you've been seeing with all the different gold stocks that you follow?
All right. So it's funny we talk about this today because as I've just written to my subscribers over at Hard Money Trader, right now is a tough time to be in gold, and more importantly, it's even tougher to be in gold stocks. So I was fiddling around with the numbers before, and I should have actually kept the chart so I could show everybody. But basically, the US dollar gold price is down 14% since the August high last year. So when you see that sort of low, it does knock your confidence in something. Like most people, when they see losses, there is an urge to jump on out. However, when you look at gold stocks, it's kind of ugly wherever you look. Even major miners are down. Explorers are unbelievably down at the moment. And a lot of my focus today, my weekly update was, yes, it's a bad time to be in gold stocks because you've got the double whammy of the gold price hitting it. Gold price falling, but also in Australia, like there's not a lot of news at the moment to lift them out of the funk. Like where I dabble and where you dabble also down with the explorers, they don't always need a roaring gold price to get moving, but they do need news. And we're not seeing a significant news flow at the moment, which makes them, as you said, kind of boring to be in.
Well, the thing you mentioned now, like with gold, I think it was 14%, it was down in US dollars, was that right?
Yeah.
The gold stocks that I watch, the big ones, they're down 40%, the actual stocks themselves. So you always get that leverage with stocks where if it's going up, they'll tend to go up more than the gold price. And now we're seeing it on the downside. But I think some of the big producers are now under 10 times earnings. They just seem really, really cheap. And when you look at the Aussie dollar gold price, it's still actually really good margins for them. So the cash flows are there. What do you think it's going to take for the market to start buying them back up again?
Do you know, I'm not actually sure what it's going to take. I've got a couple of theories, so I don't think it'll just be any one thing. I reckon come earnings season, when people realise that our miners haven't gone broke, I think that might spur some investment into them. If you have a look at their balance sheet, all of Australia's top 10 tier miners are cashed up. It's a ridiculous how much money that they've got on their balance sheet at the moment. And that's a good thing because, as you pointed out before, with the stronger Aussie dollar, it can eat into their margins quite a bit. But with these really strong cash positions, it's not going to hurt them too much. So I think come end of financial year, as we start seeing some reporting, I reckon that'll drive people into the producers. But also because gold has sold off so heavily, in percentage terms, I reckon once we get a sniff of a rally with legs, people will flock back to the producers.
Well, I've got a couple of thoughts too. One is, if the gold price holds steady from here and they maintain those good cash flows, surely they're going to start lifting their dividends or institute buybacks because they do have this money coming in. So that could be a cause of support. And then one that you keep talking about, and I think we're going to see it soon, is at some point the bigger guys are going to go, well, look, this is done. We've got all this money. Gold prices are cheap. Gold stocks are cheap. They'll go looking to acquire, future projects, whether it's explorers or joint ventures, that kind of merger and acquisition activity.
Absolutely. This is where I think for patient shareholders, they could be in for a nice surprise with all the obscene amounts of cash. Like I was looking at Kirkland Lake Gold the other day, and obviously it's in Australia, it's a tiny company. In the US, it's like a $60 billion company. They've got nearly $1 billion Aussie dollars in cash on their books. And it's a similar story for a lot of Aussie miners. They're in strong cash positions. But we are going to see our top 10 miners want to get bigger. And, I've been talking about this for for a while now to anybody who'll listen, there is no doubt going to be mergers. Like Saracen and Northern Star is absolutely the start of mergers between big and little. But if investors are savvy, I reckon we'll see a lot of the single asset companies get gobbled up by bigger companies. So if you've got a gold miner who's only got one gold project, for example, that's far more likely to be taken over by a big guy. So one gold project and a strong exploration pipeline are going to be very attractive to, the mid to large cap gold miners.
Well, the interesting thing for me too is I sort of like the look of the gold sector right now because all the momentum traders and the short-term guys, they've all been punched out now. Like it's been 6 months. They've been, they would have cut their losses by now and gone on to different sectors. So really, it's always dangerous to talk about a bottom. But again, if gold holds steady around about this price, you can sort of look for those strategic plays that might get like bought out or deals. But often with those type of things, you kind of have to trust your gut a little bit and put your money in and wait to see what happens because often you don't get an indication that it's going to come until it does come. And you were talking before we started recording about Vocus in the telecommunications sector, and there's been a few in that one as well. And often you get that big spike on the day because everyone's like, "Oh, this is going to be a deal," kind of. But often you don't see it in the price signals beforehand. So you really have to do what you do, which is your due diligence and go, well, why would this particular project be appealing to a bigger guy?
Yeah, absolutely. And this is where, look, a lot of, we were talking before about how this is boring right now. Believe it or not, if the gold market's being boring right now, that's actually your opportunity if this is an area you want to be in. While it's boring, and as you said, we know the momentum traders are out. We know the big guys aren't dabbling here right now. They've taken their profits there and run. If it's boring and these companies are getting knocked around, it means you'll be able to pick up a company for, a lot less than you could have back in August last year. I know this for a fact. My buy list is looking pretty sad. But this quiet period is your chance to, get into companies before the news hits them kind of thing, which is, I know, a big part of your strategy as well, Callum. Look for who's doing things under the radar, who's working on a project and is waiting results. These quiet times can be useful for patient investors.
Well, it's funny you say that because I remember when gold was roaring back in June and August. I got a little bit of it towards the end, but I mostly missed that rally. But at that time, I was looking over the counter stocks because they'd been smashed up, forgotten about, nobody cared about them. Everybody was piling into gold. And so the good thing when that happens is, your downside gets smaller, obviously, or potential downside, I should say. But you also don't have the pressure of like going, I've got to get in the market now. Like it's moving, it's getting away from me. You've got time to go over everything and go, well, I like this one and I like this one and I don't like that one. So when that momentum does come back, you're like, right, I'm ready to go. I've done the homework. Now it's just a matter of positioning. So these, as you say, these flat periods, they're kind of boring when you check your account. You're like, oh, nothing. But they do set up the potential for future gains because you want to be ahead of the curve, basically, and ahead of the crowd.
I'm going to completely rip off a strategy I learned from Rick Rule, and his video. This video he said it in is somewhere in our YouTube channel. So he talks about how he only buys, invests in certain commodities 3 or 4 times a year, and basically he comes up when he creates a short list, reviews his short list. And then he waits for boring periods right now when, companies have been sold off, and he buys into them at that point when nobody else is interested in them. But he said those opportunities only present themselves 3 to 4 times a year. He said, so I'm not always buying stocks people think I am. He said, that's not true. He just slowly waits. And he said, that way you can use volatility to your advantage. And this comes back to my, the thing that I've said rather repeatedly today is be patient. Because that gives you the chance to buy what you really, really want rather than, as you pointed out before, buying because everybody else is buying it and it seems really exciting right now.
Yeah, actually, funny you mentioned that. I saw the same post. I think it was on LinkedIn or maybe I was the interview. Maybe I saw it to you. I can't remember. But
you should be watching all my interviews, Callum.
Of course. No, I mean that seriously. But, Rick's he's a legend of the commodity space as well, so we always tune into what he's saying. And he had a line and he's like, it was something along the lines of like, I wait and wait, and a couple of times a year the market seems to accommodate me. And
Yes.
it's a really good line. And that's what you got to do. You just got to sit there, and then you just like, sometimes you'll go, oh, wow, I can't believe that that's available for that price. And I can just step in and pick it up.
Yeah, and look, and that's exactly it. Look, don't get me wrong. I'm obviously talking my book here. I'm a gold bullion investor, and I recommend gold stocks for a living. So obviously, I'm very on brand with what I'm saying. But it is true. Rick says it far more succinctly than I do, that the market is accommodating his investment philosophy.
Yeah, absolutely. And I mean, even what we're talking about with gold, you can do it with any sector. I just mentioned like cannabis. It doesn't have to be gold. Lithium was another classic example. Like they all just, from 2018 to 2021, they were just absolutely hammered, left for dead. Nobody cared about it anymore. And then some of the potential gains, though, since, like, Pilbara is up a couple of 100%, Galaxy, and even the smaller ones again are up. I think there's one, is it Lake Resources? It's up like 1,200%, and in this very short space of time. So, yeah, again, it depends. If you're trading momentum, liquidity, gold is right now not the place you want to be. But if you take a more fundamental or counter-cyclical approach, you've got to be interested at least.
Okay, so I'm going to try to slightly change the subject before we wrap up today. So obviously we all know that I'm in the business of recommending gold stocks, but you're technically not. You go where the news is. Given gold's so flat at the moment, would you have any gold stocks on your radar?
I definitely have them on my radar. I'm watching. I do. We talked a little this about before, where you've got, if you don't have the momentum from the actual price, then you need news flow. Well, where's that going to come from? It has to come from basically exploration, drilling results, or going from a start, like a developer to a producer. There has to be some catalyst that would have to get me interested. So I'm still watching the explorers, but that can be very hit and miss. So I'm sort of cautiously watching gold. The thing with any commodity, though, is you can never trust the price. Like we talked about, if gold holds steady. Well, the question is gold going to hold steady? Now, overall, my bias is to think that it's going to go up long term. But again, we've also got the problem of the Aussie dollar now, where it's pushing up and it's not going down. It doesn't look like it's going to go down back to where it was that drove the initial huge uplift in the Aussie dollar gold price. So that's a headwind too. So for the moment, I'm watching, but I need to see some of those headwinds, or catalyst has to be so big that it can overcome those headwinds. I haven't really found it yet, so I'm still looking over gold. But when I do, I'll be on it like a flash.
All right, so before we wrap up today, because our timer went off and once again we ignored it, maybe I should either just extend the timer or you and I should learn to listen to it, one of the two.
True.
What are we going to talk about next week? Because, look, we know I could talk commodities all day long. We know I could talk gold all day long. Should we dare delve into property?
Property. Oh, yeah, got to be talking property as well.
We talk property.
I've got lots to say on property, and with lots we can talk about. And
we might have to extend it to 20 minutes next week.
I'll be thrilled to. There's lots of opportunity in property stocks, actually, so on property itself. So, yeah, it's a good topic.
All right. Well, you and I we won't talk again, so it's actually fresh and a surprise for me next week. But, all right, we will make next week the topic of choice will be property and property-related stocks. Callum, I hope I see you then.
Look forward to it.
See ya.
Ciao.
Bye.